Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some key stocks and markets on Monday, May the 19th. And I'm starting off as usual with the FTSE 100, where you can see that there's been reasonable progress after the rebound from last month, largely at or just above the 10-day moving average, currently at 68.37. The message at the moment is that even if you are a mega bear of equity markets, there could still be a squeeze higher towards the top of a rising July trend channel from last year at 69.50, and any dips towards the 10-day line currently regarded as a buying opportunity. Probably the stop loss on the whole bull argument really would be back below the 20-day moving average at 67.69, especially as we've seen in the past that we tend to get the breaks to the downside when the 20-day line goes, as we saw in January, March, and obviously in November as well. So that's probably the best strategy in the near term. Moving on to gold, and we've been waiting for a rather long time, probably longer than most of us expected, for this metal to base out at the floor of a rising December price channel. For the channel nominally around the 1280 level, the current action really is a consolidation either side of the 200-day moving average around current levels. My view has been that the best way forward here is probably to wait for an end of day close back above the 50-day moving average at 1307. There was a false break above that feature in April, but the normal rule is that you don't usually get two failures of this kind in the same opportunity, the same situation. So probably an end of day close back above 1307 now the safest way forward here for would-be buyers and looking for a retest of March resistance as soon as the end of June. Moving on to the stocks, and a situation which has been slow but steady as far as I'm concerned. The push higher for BP. I've had a target here of 520, as you can see from the annotation. That was the top of last year's October price channel. I think the message here at the moment is that although it's been very slow progress and the consolidation here around the 10-day moving average being a rather slow affair, we can still say that above the 10-day line, we're looking at 520 as a minimum target, especially given the way that in the recent past support has come in at or just below the 200-day moving average of 472 pence. So if anything, we should give the benefit of the doubt to a higher target at 520 over the near term. On to another big FTSE stock, and that's Lloyds Banking. Here we've had a bit of a sort of a volatile and messy set of price action situations here, gaps through the 200-day moving average on the downside and upside since the end of March. Probably the favored destination or the favored scenario here is for a break to the upside, but we might have to test the floor of last year's price channel at 72 pence first, and that would be the initial area for fans of the stock to go long. If you're really sort of cautious on the situation, maybe you wait for the 200-day moving average at 77 pence to break. What is noticeable here is actually the way that the 200-day line is rising, and that should eventually drag the stock higher. Finishing off with another popular situation, that's Royal Mail. Royal Mail shares been quite a sort of rocky ride in the recent past. The key here was not to break the 550 level, which was the neckline support from the start of the year. Unfortunately, that was done at the beginning of April, but what we've seen since then is actually the bulls getting back in charge, getting back on the front foot, and we've broken back above the 550 level. The view now is that really, at least while there's no end of day close back below 550, we'd be looking for further upside and a top of October price channel target as high as £6.40 over the next 4 to 6 weeks. Any dip really towards the 550 zone currently a buying opportunity, especially in the wake of the unfilled gap to the upside last week, which so far hasn't been filled. So that's a show of strength there, and you would expect momentum to build after what has been quite a painful bear trap. That's it from me. More updates on Spreadbet Magazine during the day.